things about trading Forex is that you don't actually know exactly which trade is going to be a crazy winner or just another loss.
What's up, everybody? We are currently live.
We'll take away the weekly.
Trace back down to what we've got evidence that price is going to be bullish.
Point sort of chasing the market. I was more than happy to stay flat.
Hello everyone.
What the kangaroo tell?
Always recommend trading on the 5 minute.
Some of these exotic pairs and pretty steady uptrend, making these higher highs and higher.
Mostly trend following.
The stimulus in a certain way.
Afternoon, morning, afternoon, evening, everybody. Hope you are well. Thanks to Nick and A1 Trading. Forgot the name there for a second. A1 Trading for having me back on. It's been a long day. 7 o'clock here in Dubai. If you're watching, come say hello. Dawn, you're there. Good to see you back, mate. Hope you are well. How's everybody's trading been this week? Are we waiting for tomorrow for the big numbers for NFP? I personally am. I think it'll be quite a big one tomorrow. I'm expecting some positivity, but again, that's just my personal bias. It's a kind of red or black scenario. We don't actually know what's going to happen. We can just give our best guess, but the way the indexes are moving and how the indexes are looking technically, again, I always like to focus on the technical side, looks quite good. You have to say it looks quite good. So I'll go into the indexes first, and then I'll go into the webinar, what I want to talk about, which is my favorite ABC pattern. So the pattern that I always kind of bang on about when I'm here. I'll go into detail on basically what it is, how I use it, how you can use it, and why I think it's so effective. Simple but effective. Anyway, we'll talk about the index and I'll talk about the dollar. If you guys want me to look at anything, then let me know in the chat, and I will. But this SPX, so from a technical aspect, right, we've been in this range for quite some time, right? Between all-time highs and this support zone here, this 43.70 level or something like that. Alan, how you doing? African Wood Trader, good to see you, mate. And what we've got today, or the last 2 days, is we're creating quite a nice, simply a higher high here. So for me personally, this looks pretty bullish right now. We've come up from a decent rise, right? We've now digested that rise and we're correcting. You can say range bound, but essentially we've corrected through time rather than through price, right? So I'm kind of happy with this price action here, digesting this move. DJ looks like it's heading upwards. Yeah, I presume so, Don. I'll have a look at that afterwards. So for me, this is actually on my watch list. This SPX is on my watch list for potential movement to the upside. What I want to see now is I want to see our accumulation, our slight reload here prior to a break. So I want that squeeze in. It's too clean right now for a break. Too much clear air, as I like to say. But I want that 20 period curling up and that squeeze into the area to take that break to the upside. Now, the context here is good, right? The context here on the daily is nice. We've got our V reversal, our V reversal here, and what looks to be price acceptance above this previous resistance, previous all-time highs. And if we look at this bar in particular, this daily candle in particular, right, it's quite bullish on a little bit of volume. 20 period, that magic 20 period that I use is caught up to price. This looks good, and this is one of the reasons why, news is a red or black scenario, right? We can't predict. We can kind of give a guess of what may happen tomorrow, but I do feel like the technicals sometimes, not all the time, give you a little indication of what may happen. And for me, from a technical aspect, if I get the setup I want here, something like this, which may happen considering tomorrow is big news coming out. The market may be waiting for that. then I'll happily place a buy stop in here to potentially take this to the upside. So, yeah, I kind of like it. Anyway, let me know your thoughts. What are you expecting tomorrow? Are you expecting positivity? Are you expecting negativity? Let me know. Right, dollar. Dollar as well. You know, I'm not going to be so quick and say sell this dollar right now. Not yet. Okay, on the daily chart, again, I like to start from the daily chart. It gives us the best indication of what's happening. It still, to me, looks like a corrective. Essentially, that's what it looks like still. But what I'm waiting for, and what we kind of want to see for the direction of this dollar is confirmation here. So we haven't got that confirmation. Yes, we had a decent bar on ISM yesterday, pushing that dollar up, but a bearish bar at this resistance area. I didn't actually think it would get up there considering this price action here, but we have got up there. I did think maybe it might, but we've got up there now, and it had a negative effect at this resistance zone. And really what we're waiting for now is a break above here or a break below down here, and for added confirmation, a break and close underneath this area. Personally, you're expecting dollar bearish news. Dollar bearish news? So what do you mean by that, Don? Are you expecting negative or not as good numbers out of the NFP, or are you just expecting dollar bearishness? Because what I think may happen, and if this goes the way it goes, if you get a decent number, Tian, Denise, Tian, good to see you. Thanks for coming, appreciate it. If we do get positive news, you could see it may possibly a little spike in that dollar followed by a fall. The reason why I say that is as stocks push, right, which they probably will do on a decent NFP number, if that US dollar acts as that safe haven asset, which it kind of has been doing, expect this to fall. All right, so maybe that initial push may come on that news if it's positive, and then you may see as the stocks push, this US dollar start to fall, which it has done for the past year and a half. Lorenzo, top of the morning. That's more Irish than Scottish, mate. I'm expecting the employment to still be high. Yeah, let's see. Let's see, Denise. It'll be interesting tomorrow. Dollar bearishness, the news may be good, but sometimes the market interpret it as a bearish signal. Yeah, I think that's just because how the dollar's been acting since COVID. So my personal bias, and again, I'm not trading this, is we get a decent number, we see initial spike in that dollar, followed by bearishness. In my mind, from a longer term perspective, I'd be looking to sell this dollar down to these lows. Personally, I think that's a good play. I think with the way the market's looking, this is if that dollar continues in that vein, then you could see a decent drop if that SPX, which is finally for me, finally looking nice. And it hasn't looked nice for me for so long. I'd say 2 months. I haven't liked this, but I like it now. I do like it now. So that's my personal opinion. So I kind of agreed on dollar bearishness. I kind of agree with you, but let's see what's happening. I'll just go through. I've only got one setup apart from that SPX. That was in the euro yen, which I don't really like now after this hourly candle. Looked okay. Again, getting our squeeze, cup with handle, within a cup with handle, rising pressure into that area. And we've got what looks to be right now a fake out. So euro yen, I was looking for a breakout and retest. Doesn't look like that's happening right now. You may not get massive moves until those numbers come out tomorrow. So that's one of the reasons why I don't think I've got many setups. But again, if this does set up for me, then I'll take a breakout order on that SPX. Personally, I'll look at GJ for you, Don. GJ, what did you say there? GJ looks like it's heading upwards. Well, maybe not now if the yen wants to get a little bit of strength. GJ, what did I say? Was anybody listening? There you go. Sometimes I'm right. This time, maybe I am right. So we talked about this impulse, loss of momentum, harder reset, right? It didn't come in the form of an ABC this time. You possibly could say that. ABC here, which is what I'm about to talk about. But there was your writing on the wall. Look at that candle on volume. right? So if you played that to the upside there, you know, that would have been a nice trade. So again, it's about that impulse, loss of momentum, and, you know, essentially, yes, a corrective. Okay, you can just say, oh, it's pushed up in corrective, but, you know, we take that 3 aspects of it here. This looks good. You know, I like this on the 4-hour chart. If I get something like this, which won't happen this week, but possibly next week, this would be nice to take to the upside. And I think, was it you, Dawn, that was asking about a cup with handle after this context? I think it might have been you. This is possibly what we could get. You know, if you get a decent rise here, if we do get that would be lovely. You know, take that to the upside all day. Certainly if that SPX rises. And you can see on the daily here, right? Look at this on the daily. Slight head and shoulders there. Break through that neckline again, adding to that bullish sentiment. On the daily chart, that's a doji. Yeah, so there you go. That's what you're talking about there, right? So, I mean, everything there looks, I mean, we don't want to say it's going to go up. We don't know what's going to happen in the future, but everything there looks good for GJ. There you go. There's a little pattern that worked. I'm glad that came through because I think it's a good kind of, I mean, it's not there yet, obviously, but if this goes through, a good thing to do, I mean, you can call it a bigger one here as well, really. A good thing to do, if you like that kind of context, is take a screenshot of it and put it in your playbook. So put it in your playbook, remember it, and if it does work, you can look back on it and say, okay, this is exactly what I want. Make your notes on it. Say, this is your impulse. This is your loss of momentum. This is your harder reset. This is a good sign. If we push through, give us a cup with handle. This is our context. Blah, de, blah, de, blah. Make some money. So yeah, I like that, GJ. Don, I do like that. All right, let's go into the webinar. Will be the ABC pattern. So the ABC is a type of pullback. So pullbacks can come in the form of a few ways. You've got your single leg pullback, just like this. You've got your multi-leg pullback, and you've got your kind of complex pullback, which is probably, if you call this your multi-leg pullback, which can come form in the ABC, but then you can have an A, B, C, D, E, etc., possibly known as a channel. So this is what I want to focus on today, your kind of complex pullback. Now, let me just get my notes up so I remember what I'm saying. Excuse me. So it's a pattern that I use very heavily in my trading. You know, I love it. And the reason why I love it is because it works. You know, it works time and time again. And there's a few different ways we can use it. So the premise of the pattern is, right, if we link this to Dow theory. So Dow theory simply states that if there's higher highs and higher lows, we are on a uptrend, and vice versa. Lower lows and lower highs, we're on a downtrend. Now, what Dow theory also tells us is we have 3 types of trends. Right? We have a primary trend, we have a secondary trend, and we have a tertiary trend. Primary, secondary, and tertiary. I'm not going to try to write that with a mouse, but that's what you have. And what the primary trend is your initial or your kind of more prominent direction of the market. So if we go to any chart here, let's look at GJ. This is your primary trend, right? Upside. Your secondary trend is your pullbacks within that primary trend. So your secondary trend is essentially your pullbacks. Your tertiary trend is your volatility or your movements within that secondary trend. So within that secondary trend, when you get movements like this on lower time frames, that's your tertiary trend within your secondary trend. So you can have this was a 4-hour chart. Possibly on the 15-minute, you can have an uptrend, downtrend, etc. That is your tertiary trend. Now, the ABC, if we go into it, it is a type of pullback. It's a complex pullback where we come down, we push up, so we come down creating A wave, we push up creating B wave, and it's important to note that B wave cannot breach the highs of this high up here. So we have B wave here, and we come down, breaching A wave to the downside, creating C to push on to the upside. Okay, we can get an AB shallow C, which is this, where C wave does not breach A wave. But for me, the more powerful pattern is the standard ABC. Now, the reason why I think personally this is powerful is if we go into the psychology, I'll draw this a little bit better. If we go into the psychology of this, everybody still there? Everybody still with me? So within this ABC, right, what we have to remember for trend continuation is we are coming from an uptrend, right? And what happens at B wave is you might get a lot of sellers at this area using Dow theory, but using Dow theory incorrectly, saying, okay, we have now come from this trend and we have created a lower low, right? So we've got a high here and we've got a lower low here. So you get sellers coming into B wave stating or believing that this trend is now changing from an uptrend to a downtrend because we've got that lower low, right? Which is incorrect. So what they're failing to know and what they're failing to remember is those three types of trends in Dow theory: primary trend, secondary trend, tertiary trend. What they're failing to realize is this is a secondary trend and not changing as part of this primary trend. There's a lot of arrows in there as well, so that might be a little bit complicated. But, you know, so wrongly so, people are coming in here, and this is just one aspect of it, saying, okay, lower low, and I'm going to take this market to the downside. Okay. Secondly, we've got A wave. So A wave, remember I told that there was a few different types of pullbacks, and one of them was your single leg pullback. So we have a pullback here, and we've got buyers coming in at A wave, right? Thinking that this is part of a single leg pullback. Okay, so we've got buyers at A wave, and we've got sellers at B wave. Now, if we go into this, okay, if we go into this, let's say the market is pulled back and this person A, let's call them, we'll call them Don. Don is a buyer at A wave here, right? When this market goes on, so Don places a buy order. Correction, it's lower high. C will be lower low. What do you mean, Sandeep? If closed below A, it's a lower low. Yeah, okay, let me just go on, Sandeep, and I'll explain it in a second. So we've got Don here at A wave, buying this market, thinking it's a single leg pullback, buying here from this upward trend, right? And then we've got B wave here. We've got, we've got Alan at B wave, thinking this is changing trend, and he's selling this market at this point. Okay, so we've got Don at A wave and we've got Alan at B wave. When this comes down, right, when this starts to move down, Don here is getting a little bit worried, right? Because Don's thinking, right, this is pullback. We're coming from an uptrend. I'm buying on the pullback. Okay, great. This is going in my direction. And then all of a sudden, you know, it flips over and we're coming back down. So Don's getting a little bit panicky, and Don might have his stop loss underneath that lows. Right, so at this point in time, we're getting trapped. Don is kind of trapped. There'll be a lot of trapped buyers in here thinking this is a single leg pullback, and they might start out exiting of their positions, right? And if they don't exit their positions, right, they'll come down, and the likelihood is their stop is going to be hit. During this time, during this section here, right, Alan, who took a sell at B wave. Can you all see that? Can you all see that there? Oh, okay. I'll do it again so it's easier. So Alan, who took a sell order at B wave, is quite happy, thinking, okay, there's a lower high here and the market's moving in my direction. So we've got A wave in here now getting stopped out, panicking. They have sold. We've got B wave in here, Alan, who's happy until the market starts to flip round and move back to the upside. So when the market flips around and moves back to the upside, Alan is obviously now worried because the market's moving up, and he's saying, right, well, this is supposed to be a lower low. I'm now worried that we're now breached these lows here, and we're moving up. I'm going to start exit my positions. His stop is probably going to be here, which is why I think B wave is always very key for movement to the upside, because you've got a lot of stops at this wave, and you see markets kind of push on quite heavily from this section here. Right, we following? Is everybody understanding that? So this is retail. So this is retail traders here that are getting trapped. So we've got Don, who's a trapped buyer, and we've got Alan, who's a trapped seller. They're both stopped out, and then we move to the upside. Right? This is my personal opinion. Do I think manipulation happens in the markets? Personally, yes, I do, which is one of the reasons why I like this ABC pullback. Again, sellers taken out, buyers taken out, movement to the upside. Excuse me one second. Now, how we can trade it and how we can trade it effectively is by adding a few things in. So, as I said, we've got our single leg pullback and we've got our multi-leg pullback. The reason or how we can kind of trade this better is adding a few things in. And one of the things that I add in, and one of the things that I really like, is the 20 period simple. So a 20 period simple moving average. And the reason why I like that is because if you look at charts, right, you add a 20 period in, the likelihood is price likes to pull back or correct roughly around that 20 period SMA. It's just a great guide, I feel, for getting into trends roughly around that pullback zone, possibly good for pullback traders. That's what I personally think. I see it time and time again. So adding in a 20 period, right, will help you, firstly, not get involved in this type of pullback, right? These single leg pullbacks that can turn into a complex. So we add our 20 period SMA in, and at this section here, at A wave, we can look at that 20 period, right, and look at the gap between price and that 20 and think, right, this is kind of not ready for continuation to the upside. Now, what we have to remember is markets trend 30% of the time, markets range or pull back 70% of the time. So if you have a push up, and again, just by using your eyes, Alvin, how you doing, mate? Good to see you. Just by using your eyes, you could probably see that wouldn't be enough to digest this move. I talk about digestion all the time and making trends healthy. So trending markets, they happen a couple of hours if you're looking on a smaller time frame, and then might take a day or two before they continue. Not all the time, but a lot of the time. So using that 20 period SMA will help us not, if you are a pullback trader or whatever kind of trader you are, getting in at this single leg pullback is a little bit too early. So you may be right? So this may actually, you might have a larger stop and it may continue, but you're putting yourself emotionally through all of this before it does, right? All this price action, which may take quite a long time. So using that 20 period here, right, we can see that, okay, I don't think this is ready to move yet. We get our move up here where that 20 period is still catching up, another move down, and sometimes, and I think the best entries are C wave on that 20 period for continuation to the upside. So I use that in my trading. So one of my best setups is a breakout and retest where I get an ABC corrective. C wave is here. Our 20 period is on C wave, which also coincides with previous resistance potentially becoming new support, right? And movement to the upside. So there's one of the things we can use to help us in our ABC. Now, entries. Oh, sorry, another thing before I go into it that can help us. So not only the 20 period, but a simple Fibonacci. All right, so we can take our Fibonacci tool, which should be taken from the latest impulse. So if we have a trend like this, right, we're looking to take the fib levels from here to here. All right, so our latest impulse, and looking for that ABC to pull back to roughly around that 40-60 box. which is the 38.2, 61.8, 40, 60 box, easier to say. So again, if we get an ABC, or if you get your single leg pullback and looking at this, we got our 20 period down here, and this Fibonacci, right? You take a fib level, and it only comes to that 23 or not even close to that. Again, another indication that this is not ready to move to the upside. So using that 20 SMA, using that Fibonacci, getting to roughly around that 40, 60 box is another good indication that trends could possibly be continuing using this complex corrective. Yeah, everybody following? Everybody following? Okay, entries. So entries, how do we actually trade it? There's a few different ways to trade it. And the safest way, right? The safest way to trade it is, oh, it's not a very good line. Safest way to trade it is a break of this B wave here. So like I said, B wave is key for me. I mean, okay, probably the safest way to trade it would be a break of the highs, right? No, there's no doubt about that. But I always think B wave is where you see the biggest volatility in the best moves. So breaks of B wave, but again, not just price coming down here and then breaking through, right? We want to see nice price action. I appreciate that, Lam. Thank you, mate. We want to see nice price action before that break of B wave. So we don't want to see our climactic moves. We don't want to see our extended moves. How do we see that? Again, using a very simple 20 period SMA, right? You can see extensions going into a level. As a breakout trader, you never really want to take breakouts that are extended into that level because they're often susceptible to snapbacks. And that can happen in the ABC corrective as well. So what we want to see is nice price action, potentially again, the three easiest types of context I guys can tell you is a head and shoulders, a cut with handle, or a V reversal, right? Very simple three contexts. And that's what we're looking at, squeezing into that area on this break of B wave to continue to the upside. Again, added into that, you can take a breakout retest of B wave, all that kind of good stuff that you probably know already. So that's your first type of entry, is your breakout from B wave or your breakout retest from B wave. Right, your second entry, and your probably more aggressive entry, which is what I use, is C wave here. So how do we get in on C wave? How do we know when that trend has changed? Great info there for the entries. It's always hard to find the best entry. Hope it worked. But does the 20 MA work on all time frames? Yeah, Alvin, it works on all time frames. You have to go and test it out. So I know I trade from the 30-minute and above. So 30-minute, 1 hour, 4 hour daily. I found that, and I'll tell you, I've found through my back testing that this kind of, as with most stuff, it works better on the higher time frames because your higher time frames hold more weight, right? So I think most things do work better on higher time frames, to be honest, apart from scalping strategies, you'd say. But you can, Alvin, this is, okay, it's quite a good question, actually. If I go into it, at B wave, let's say you're looking to enter a B wave and you've got a 4 hour chart, right? But your entry time frame is the 15-minute. If you see on this 15-minute a decent kind of context, but your 4 hour is like healthily trending, let's say, then that's okay, right? Because you've got your context on the 15-minute. So that's okay. Yeah, I see what you mean there, Alvin, yeah. So using that 20 period, I think the most important 20 period is on your trading time frame. Right, so if your trading time frame is the 15-minute, what you normally say is you go 2 time frames above for your higher time frame context, in which case it would probably be the 1 hour and 4 hour. Right, as long as your 4 hour and your 1 hour is not massively extended, then that's fine. Right, then that's fine. So I think the 20 SMA, yeah, certainly for your trading time frame, because you're trying to get in around the best price. So if you're a pullback trader, you're trying to get in around here, right? Just when it starts to move, because you don't want to be caught in, a range or a deeper pullback when you could have got a better entry, because you're putting yourself through that kind of psychologically of, oh, is it going up? Is it going down? I'm losing money. Should I take it out? Etc. So yeah, good question, Alvin. I'm still a new trader, but I find the markets respond to higher time frame support. Yeah, Don, that's completely true. Yeah, the higher time frames definitely hold more weight. And if you're a new trader, stick to the higher time frames. It's easier, and you also have more time to think. You know, even for me, like I much prefer like looking at this SPX. If you look at the SPX, that's GJ, or even GJ. Like I prefer waiting for this to set up. You know, I know this holds more weight. I'm also more profitable in higher time frames. But you know, you think about it, this is a 1 minute chart, your mind's going to be going very quickly. Whereas for new traders, it's kind of difficult. But with the 4 hour chart, you know, you could be watching this for a week, 2 weeks or something, and then going. So you got time to prepare. And yes, the candles hold more weight. So the likelihood is it might be a better entry than the 15 minute. Because you get a lot of noise on the smaller time frames, right? On the 15 minute, 5 minute. A lot of little fakes, which you don't really get as much on the 4 hour. They still happen, but you don't get as much. Okay, what was I saying? C wave. Yeah, so your other entry, your more aggressive entry is C wave here. So how do we determine? Because at this point in time, we don't know when this is going to be over, right? Right. It's easy to put a line here and say this is going to be finished back, but you know, in real time, how do we know it's going to be over? We can use two things. The first is simple candlestick patterns. So I use 3 candlestick patterns, right? And one of them is not even a pattern. A hammer bar, an engulfing bar, and a morning or evening star. That's it. That's all I look for. Hammer bar, engulfing bar, morning or evening star. Right, so that's simple candlestick pattern, right? You remember hammer theoretically is supposed to be a trend change indicator, right? Because that's where we're coming from. We're coming from a downtrend to an uptrend. The hammer gives us an indication. Same with the engulfer, same with the morning star. But not only do we can we use that, the other thing we can use is volume, right? So I love looking at volume. Volume is one of my favorite. I mean, I only use a 20 and a 200, but volume is my favorite indicator. So, you know, we are looking as retail traders to piggyback on the big players, right? The big institutions. How do we know that? It's potentially by using this volume, seeing where it's coming in because they move the markets. So if we have our complex corrective and what's looking like an ABC, right? And we get our catalyst, let's say our hammer bar, which is my personal favorite, hammer bar here, but the hammer bar comes on high volume, then this is great, right? It says to me, okay, people like this position. Again, you add into a breakout retest. You've got previous, actually, I'll go through that again. I'll do that in more detail. So if we have a breakout retest, right, and we have our ABC, so we got a C wave here. Not only do we have a hammer bar, which is an indication in itself, right, that this is a trend change. We've got our previous resistance potentially becoming new support, right? Good, another check off the box. And if we get hiring volume coming in relation to this pullback, then again, it's another great sign that people are coming in here thinking, okay, we are accepting now that this previous resistance is old support and we want to continue this trend. So that as an entry, this is my favorite type of entry for a breakout retest. I love it. You know, my eyes light up when I see it. And I think it's very powerful and can show or can get really great results. And also with the volume, right? So again, if I go into a breakout retest, what we want to see with that volume and within this ABC is ideally a higher break. So we're looking relatively, if you've got lower volume here, a break on high volume above that resistance area. Then what we want to see, essentially as this pattern progresses, is lowering volume during the corrective. Right? We want to see lowering volume during that corrective phase. Now, the add-on to that, and I know this is probably getting a lot of information, the add-on to that is it's okay if we get a bit of hiring volume during this section from A to B, so from A wave to B wave. It's okay if you have a little bit of higher volume. That's also a good sign. Lowering volume during this section, lowering volume during this section, but essentially we are looking for lowering volume during that pullback, and an uptick in volume around our catalyst. So an uptick in volume around our catalyst. So you kind of want your volume signature to look like this. So showing volume on that break, right? Good sign. Showing lowering volume on that pullback, good sign. And showing higher volume on that catalyst or on that C wave, suggesting that, you know, we're at the end of that corrective. And again, adding in on that 20 period SMA, on that 40-60 box of the Fibonacci, all of this is adding up to a lot of things in your favor, which makes it a very powerful kind of thing. So, I mean, that looks really complicated, right? But I think you know what I'm talking about as I kind of went on. So that is your entry at C wave. And your final, there was another one I was going to talk about, but I can't remember what it was. I mean, yeah, I mean, also your kind of final entry is a break above the highs here, right? But again, you want nice price action into it. Right, we all understand the ABC. I think I've got some, let me get some examples here. I'll show you some examples. Where, oh, your stop loss, I'm not going to stop loss. Where's the stop loss below the hammer candle or beginning of wave one? Thanks. I mean, your stop loss is dependent on you. So, I mean, I used to put my stop loss, let's say if I was taking this C wave here on a catalyst, I used to put my stop loss on a hammer candle, right? Which was very aggressive, right? Very tight. So I wouldn't win as many trades, but when I did win them, they would really go. But for me now, again, it's quite different because I'm a breakout retest trader. So if I have a swing prior, so let's say I have a cut with handle prior to an ABC, my stop will be under the previous swing once I get that catalyst. Does that make sense? But there's different ways to do it. So if you're a Fibonacci trader and you're just trading pullbacks, right? And if you're just trading this pullback, there's a few different ways you can put your stop loss. There's no right answer to that, said Sandeep. You know, it's whatever resonates with you. If you want a tighter stop loss, you can do that. If you want a larger stop loss, like maybe below the impulse, then you can do that as well. It's completely up to you. Maybe you put your stop loss underneath that 20. You know, maybe you put it underneath the 61.8. There's no right answer to that. You know, you got to go figure out what you like. So for me, again, as a breakout retest trader, and this is where I say the ABC, if I have a cut with handle, right, followed by an ABC, and let's say the hammer is here, right, my stop is underneath that previous swing rather than the candle, because I found that I preferred winning a bit more trades, because sometimes you can get a bit of volatility before moving to the upside, right? And you can get what they call an ABC 1-2. So you can get an ABC 1-2 and then move to the upside. So there's actually, again, there's actually an entry in here as well. So there's lots of different facets to it, Sandeep. It just depends on what you kind of like. So I knew right off the bat that I like C wave and then I like taking breaks of B wave, because for me, again, you see a lot of volatility and movement on that breaks, on good breaks of B wave. But remember, it has to have a nice context. We don't want to see this if you're taking that break. You want to see a nice healthy trend, rising pressure into that area, and normally you get a good result. Would it be better to watch for the engulfing candle after the hammer? Yeah, I mean, that would give you a better indication, MYK. You can do. I mean, yes, it would give you, if you get a hammer, then engulfer, it'd be a good sign, wouldn't it? So, yeah, if you want to do that, then perfect, yeah. No problem with that. I mean, would it be better? Then, yeah, if you see a hammer and then engulfer, that would be a very good bullish sign, or bear sign, whichever way you're looking. So, but it just depends on whether, you know, that actually happens or not. Sometimes you can just kind of get, you know, price action. Instead of there's no catalyst, it just kind of curls around and goes to the upside. So those kind of ones I can't really get involved in. The volume indicator is fantastic. You can see when the market's about to change direction. Yeah, I think volume's great, Don. Honestly, I think volume's great because that's what we're doing, right? Retail traders, if we all sit in one room and press buy, we probably wouldn't move the market. So I want to see where these big players are coming. And I think that's, you know, volume is probably one of the best reasons to do that. So I'll show you a little real life example. I've got one here. I haven't found the other ones, but there we go. We've got our ABC here. Look what we've got at C. If I zoom in here, a nice hammer candle at C wave, right? A wave is taken out and we move to the upside. So a lovely ABC on a 4-hour chart. I remember this trade actually. It was a great trade and this produced that kind of results. So ABC, a great pattern. I think I'm trying to remember if I've seen one recently. I have got so many charts in my computer, but I haven't got one. Ready, to be honest with you. I've been working all day, so apologies for that. I'll try and get more examples the other time. I mean, the one off the bat that I do remember recently, I think there was one with oil. No, there wasn't one with oil. There was one with the SPX recently. I think there's been a few with the SPX, to be honest. Let me go back. This is not one because B wave breaches the highs there. But the easiest one, I've shown this example many times. I need to get some more examples, I know. But easiest one in the SPX is here. ABC, high volume coming in there. You've kind of got your catalyst candle, and off we go. Here. So I will get more examples for you guys. I just haven't done it today. I've just been far too busy. But hopefully you guys understand it. If you've got any other questions, let me know, and I'll answer them now. But that is essentially the ABC pattern. And the main reason I like it is people are getting their stops taken out above and below, and you normally see a lot of volatility. So let me know if there's any questions, and if not, I will be off.
Hey guys, thanks for watching today's show. I hope you enjoyed it. And before you go, make sure to check out our guest today and also subscribe to the A1 Trading YouTube channel if you have not already. Risk Calculator is a risk management tool built specifically for MetaTrader 4 and MetaTrader 5 to help you position size properly. Their easy to use software will allow you to enter and exit positions with lot sizes that are calculated for you, suited to your risk management settings that you allow for the tool. This is a big thing because a lot of us struggle with over leveraging or accidentally taking a position size too big, and Risk Calculator is there to help. Like I said, with the click of a few buttons, you're able to set your trade and the lot size will automatically be calculated for you so that it suits your risk management plan. In addition to actually setting your trades with the proper lot size, it also allows you to manage your trades as they're going along. Things like trailing stops, moving stops to break even, or even partial take profits are all tools or features available with the Risk Calculator functions that are available on MetaTrader 4 and MetaTrader 5. If you're interested in checking out Risk Calculator, there's a link down below in the description. And if you use that link, it does help to support what we do here on the channel, which is provide free trading content, again, by the thanks to the help of our sponsors. So thanks so much for watching today. Again, make sure to subscribe to us here on YouTube if you haven't already, and we'll see you back in the next one.